I see a bear market coming very, very quickly, and we can dig into that a little bit more.
Yeah,
But
let's
I agree
do.
with you.
Let's do.
Rates are gonna, the Fed's gonna lower rates next session.
Yeah, so
No doubt.
September, it's probably going to happen.
Yep.
What is the cycle catalyst that you feel is going to push us into a bear market? What are things that need to happen or will happen that you think are coming?
Yeah. Well, first of all, the first two rate cuts will propel this bull market even higher up through the end of the year.
Yeah.
What I'm seeing is more of a global macro situation. Most major developed countries are already in a recession.
Exactly.
The Fed messed up by not lowering rates the last two sessions, and that is going to drive us into a worse recession than we probably would have gotten.
You and I are on the same page. Everybody is telling me no on this. And I'm like, listen, we are going to get hit with lagging numbers. I think the job numbers are the canary, no pun,
Great.
canary in the coal mine right now.
Yeah.
And these job numbers keep getting revised to the level of, just craziness. And I think that it's still not accurate. I don't think that the Fed truly is getting real data, which is pushing these decisions for these governors in a wrong direction. You think they should have cut, not in July, you think they should have cut before?
Absolutely. I thought there should have been a cut in as early as May.
It's May, yeah.
And now look, I do think the rest of the curve is correct. I like the 10-year at 4.5%. I like the 30-year at 5%. A lot of people
Right.
disagree with me, but it's because they're real estate people, right? I mean,
Yeah.
even Trump, he wants the 10-year to come down. He's a real estate person. He wants to drive that real estate. But real estate has gotten out of control,
Yeah.
and prices need to come down. Housing, I'm not even talking about from an interest rate perspective, but just the price of a home is double what it was 3 years ago, and real wages have stayed flat.
What? Yeah.
So, we need to see real estate prices come down.
Do you think that'll be one of the key catalysts other than jobs?
Oh, real estate is
Real
always the
estate,
catalyst.
that's the
Always.
big one.
Yeah. Yeah. I mean, look, jobs are what it is. I mean, we actually have a labor shortage, and at 4.5% unemployment, that's actually still too low in my opinion. I want to see 5% unemployment. Right.
Wow. Okay.
Um,
Steven,
well,
out there, everybody, I want to see
that's
you
not a
lose.
popular statement, right? Most
Yeah.
people want zero unemployment, but look, I mean, let's. The reality is,
Yeah, reality check is
the
coming.
standard deviations of our population is not suitable to work for people.
No doubt.
I mean, you're not suitable to work for people. I'm not suitable for work for people. We're clearly on that end.
We're out of the game. Yeah.
Us.
No, we're unhireable.
Yeah, exactly. And then there's a lot of other people that just lack the cognitive skills to work. I mean, I hate to say it that way, but it's just
Yeah, sure.
But
So
right now,
you think it's an interest rate led push to a kind of a froth bull into the end of this year, a reposition from a global macro position that's really pushing more and more countries into recession. The United States will join that.
right?
And when that occurs, rates may be low, but we may be having a significant amount of inflation, which of course resets a lot in our society. But wouldn't that be good for digital assets if inflation and the Dixie continue to go in opposite directions?
Yeah, I think even if rates are lowered, it necessarily won't cause inflation. And here's why. Most things are priced to the 10-year and to the 5-year. And as long as those levels stay close to where they're at, or at least get normalized, you're not going to see massive inflation.
Okay.
Really,
You don't think tariffs is going to push harder?
No, I really don't.
Interesting.
I was one of the people when tariffs came out, everybody was bashing tariffs. But the reality is all it does, it evens the playing field for global producers, because
Yeah.
like I was just in Asia, and you rarely see. I was in South Korea, Japan, and Singapore, and you rarely see U.S. goods. Why?
Yeah.
It's the massive tariffs on U.S. products. So all this does is even the playing field across the board, so that it's like, look, if there's tariffs on the U.S., there's going to be tariffs over there, and that's how people collect taxes without overtaxing their citizens. And right now in the U.S., we are overtaxed.
Yeah.
tax rates need to come down, tariffs need to come up, and
Do you think Trump will lower taxes
I hope
even further?
yeah, I hope he does. I mean, all he did was really this time was extend
Extend what
the
was already
cut
there.
that
Yeah.
that expired. But I really do hope he begins to lower taxes. But you can't really do that until you start having regular income from the tariffs.
Interesting. How would you play this then? You've got a potential global economic, I won't say meltdown coming, but at least not a reset even. Let's just say a softening of the market, even though we could have significant more. So there's some people out there expecting the S&P to crater. That would potentially go into risk assets, maybe, or a lot of cash positions or gold. There's a lot of safe and secure areas. Do you think ETFs will be one of them?
Yeah, ETFs are usually pretty safe and they're pretty sticky. So it's rare that ETFs lose AUM from people moving out of them.
Hmm.
It's more due to the actual price. So it is a good, safe, sticky place to hold assets. But you asked what I would do. I mean, if I were the Fed, right now the Fed has been slowly unwinding a very large balance sheet.
Yeah.
Right now it's at $6.6 trillion.
Hmm.
I would continue to unwind as that mature, but I would also sell out of the longer dated securities to prop up the 10-year and the 5-year while lowering rates.
Interesting.
Lowering rates at the short end actually helps the US consumer that's struggling with credit card debt, credit card defaults, auto loans, which are all pegged to the
Yep.
lower end of the curve. Whereas the longer end is more things like real estate, which is
Yep.
overbought right now, and even corporate bonds. So I think those need to stay in place, and the Fed has a really good chance here to actually do something right in lowering rates and creating a natural curve again. Because right now, I mean, there was just a failed 10-year Treasury auction because the 10-year is sitting at 4.25, and why would
Crazy.
I buy the 10-year at 4.25 when I can buy the short end at 4.25?
Exactly. Yeah. And that's the problem that you're dealing with. It's a conundrum in the market right now with the way that this has been. Do you blame everything on the Fed right now?
I blame everything on the Fed? No, no. But I do. Well, what I blame it on is government spending. I mean,
Yeah,
that's
well, sure. That's of course number one. You don't think that Powell and his governor goons are going to just say, "No, we're going to have to cut." I think they're getting pushed back into a corner
they are.
again. And when you push them into a corner, they seem to print. You don't think they will?
No, I think they will this time. I mean,
Oh, okay. All right.
yeah. Look, Powell's been very politically motivated over the last 3 years, and I could actually predict exactly what the Fed was going to do without even looking at the data, just knowing just watching the election schedule.
Well, the 50 basis points, I think, was the tell. It was the final stroke of, on the Mona Lisa
Yeah,
that kind of put it into play. Uh, it's interesting because, there is a lot of pressure right now. Obviously, the BLS, head getting, ousted, that in itself is an interesting situation. But listen, these job numbers have always been inaccurate. I was looking back through research when Obama, even though his job numbers were somewhat flat, but even prior to that, Bush, who had largest revisions, Biden had large revisions, Trump had large revisions on his first round. So it's always inaccurate. So I don't even know why the Fed uses this data. If it's always inaccurate, it's like, well, I think I would be getting into some new data points.
Well, by the way, CPI is always inaccurate because you always rejigger the data based on what you want politically. So
Can
looking at
I believe
CPI,
anything anymore, Stephen, from
yeah,
these bureaucrats? Anything? Surely
yeah,
there's got to be some bastion of truth out there.
all you get is gaslighting.
This is why digital assets, my friends, are going to continue to take over the world. We are going to see a massive transformation, and we may be seeing it right now. We just don't see, it's in the very early stages of it. Last couple of questions to you. Institutional, really active right now. Wall Street, I think, it's probably the one thing that pretty much put Bitcoin back up to 100K now, it's flying again. You look at institutional capital and the amount of advisors that are out there, and this is something we talk about on the show a little bit, is there's a big lack of digital asset advisors. none of which is really training people or even exposing them to digital assets. And we have several groups that we work with here in South Florida, and they're now starting to ask questions. And to me, I mean, we do technology consulting on why certain tech is doing certain things. Do you think that we're going to get an onslaught of advisors that are now flipping over into digital asset recommendations?
I think it's still going to be very, very slow. But now
Okay.
that there's financial products that have digital assets in them, they will. So until the Bitcoin spot ETF, every financial advisor I know made fun of Bitcoin, made
Yep.
fun of all digital assets.
No doubt.
They wanted to play golf all day, and anything that took money out of their accounts for their clients and moved it off platform,
Yeah.
they were
No
anti.
good.
But now that there's ETFs, it's like, oh, okay, maybe we'll look into this.
Yeah, for sure. Well, and that's the thing that we're going to be dealing with right now is just the awareness of this going forward. Of course, with Trump's little stroke of the pen, he's putting the potential now of digital assets going into 401ks. Do you think that can hold as an executive order, or do you think Congress will need to get involved?
I don't know. That's a really good question. The hardest part about 401ks is you have to follow ERISA rules, and it's a whole other level of compliance. So
Yeah.
we just stay away from that.
Mm.
Not that it's bad. It's just we're a small team. We don't have we're still not big enough to have our ERISA compliance person on staff.
Right.
But but I do think it's a great idea. I mean, I personally, in my own 401k that's self-directed, I hold ETFs
Mhm.
of Bitcoin, and
Yep.
when there's more available, I'm going to hold more.